Hey guys, what's happening? Hey, it's good to be back, man. I spent a week on the beach last week and it was fantastic. We had a great time. As I suspected, there were tons of people there. There was absolutely no way for me to break away and have a little bit of quiet, private time to have this discussion. But anyway, we're back now, and we got back last night and there's a lot of work to do, man. The grass is growing like crazy. I'm gonna have to not only mow but also get the tractor out and start cutting some pastures. That's always it's always fun, but it's it's a lot of work, man. Bees are doing well. I got to get out and check those probably tomorrow. Plan is to put some mite control in, as well as maybe do some checkerboarding on the honey supers, so I can hopefully get some good honey this year. So we'll see. We'll see what happens. But so it's good to see all of you guys here tonight. Hey, tonight we're going to talk about the top picks I have for this current market. I think there are some good buys to be had out there, so I'm excited about that. I want to share that with you. Thought I'd also share just some things that I'm looking at. And there is a question also in the questions for Kevin, which is in my Discord. If you have not joined the Discord, feel free to do that. It is free. You just click on the link in the notes or the comments to this video, and you can get in there, sign up for free. There's a lot of good discussion that happens on companies, and there was some discussion this morning. I forget what the company was. I think it's T. Rowe Price. So there's a lot of good discussion in the Discord on T. Rowe Price. So if you're not in there, you kind of missed out on that. So, but anyway, we talk about a lot of different things in there. So anyway, let's take a minute to see who all is here. Looks like it's a little slow night. I know my buddy ex-dividend dad, he just couldn't stay awake. So we'll forgive him, as we are all getting a little bit older. So it all works, man. All right, so let's see who else here. Got my buddy Janice is here. Good to see you, man. Good evening to you as well. Shannon is here from Atlanta. Pat, he said he's turning 70 this week. Time to start spending some dividends. I agree, man. I think you ought to celebrate. Let us know what you're going to do to celebrate your 70th birthday this week, man. That is really, really cool. I will be turning 60 this year, later this year. So I'll let you guys know when that is. So you guys can either celebrate or send me condolences, one of the two. But Pat, that is fantastic. Happy birthday, man. It is. That's really good. Thanks for sharing that. So Rust Moments is here. What's going on, my friend? Good to see you. Yeah, love top picks. I do too, man. And good morning and evening to you as well, Billy. Did I buy any Berkshire B today? I did not. This is Fast Eddie. I did not. I saw that my close friend and confidant Warren Buffett is gonna kind of lay down the what do you call it, the sword, and turn that over to some of his henchmen. So he's gonna kind of hang it up at the end of the year, from what I heard. I didn't read a lot of details about it, but I did hear that, and I think this has been a long time coming. So I don't think there's anything wrong with Berkshire at all. I just don't know, I just don't know enough about the new management team yet to kind of jump in with both feet. So we'll see what happens. I think it's fine. I think they run a great business there, but I think I'm going to kind of take a wait and see approach on it. So Oscar is here. Good to see you, man. And Rust, yeah. I actually tried to get that on here so I could show everybody. But we spent a little time at our beach house this past week, and it is just so relaxing. And by the way, if you are on the Discord you got to see the view that I was looking at this week. So it's on the Discord. Feel free to join that. You can see that. But yeah, we enjoyed that view. It looks right into the ocean, and it is just a fantastic, relaxing time when we go to the beach. So thanks, man. It's good to have that opportunity out there, to take advantage of that. Wow, Cookie Monster, I haven't seen you in a while, my friend. Hopefully everything is well with you, and good evening also to you. So, all right, let's get started. I mean, why not just jump right in? So I'm going to go ahead and share with you guys my top rated buys. Which stocks are the top rated buys for the Wealth Circuit investing portfolio? So here we go. If you guys are ready, I will. Oh, there's a couple of things I always share first, though. And so here we go. Hopefully you guys will enjoy this. So you've seen this before. This is not new. I put this in every week here in this battle with the tariffs. There's a lot of people out there who are freaking out and panicking, and it is those times that we can make the best decisions as an investor. So there are always reasons not to invest, but the S&P 500 has returned 10% per year on average since 1950, even in the midst of all of these other things going on. We had a Cuban Missile Crisis. We had stagflation. We had Black Monday. We had the Gulf War. We had the dot-com bubble. We had September 11th. You get the point. There's a lot that goes on, and there's some big things that have happened. Yet, here we are. So the point is to invest in quality, fairly priced companies, and over time you're going to do very well, or at least historically we have done very well. Let's put it that way. The other thing I'd like to share with you is where the portfolio is compared to all the indices in the midst of all this turmoil. So I started doing this around March the 31st, because March 31st, I was down about 0.5%, and the S&P was down 4.26, NASDAQ was down 10.29, Dow was down 0.85, and the Russell 2000 was down 9.58. Now you see that we had a lot of bouncing around, and you see on 4.4, the portfolio was actually down 8.32%, so it dropped almost 8%. No, it didn't drop 8%. It dropped 8 percentage points, which was a pretty big number. Then on April 11th, it bounced back almost, recovered over half what it had lost. And then it dropped back down in April 18th again, and then jumped right back up in April 25th, down 2.5%. And as of Friday, we were down 0.42%. You see that the other indices are also still down. However, some of the indices have improved faster than our portfolio has. But that's kind of the design. I just want to reduce the volatility in my portfolio. So I just don't want it swinging around so wildly. And so we're back to kind of where we were, a little bit better than where we were on March the 31st, in the midst of all of this roller coaster of activity. And what did we do? We just kind of sat back. We didn't do a whole lot. We bought a couple of things, but, we just kind of let the market play out. So hopefully you're doing the same thing. And, okay, so what are the top picks? That's all that's for free. Let's see. Top picks. Here we go. Top picks. Stock listing. Are we ready? Here they are. They are ConocoPhillips, ticker symbol COP. I do own them already, and but I do rate them as a buy. I am down on them probably about 10%, but I think in the long term, this is a good oil and gas company to buy and to hold. They've got a lot of good things going on. They're going to be returning a lot of capital to shareholders. I want to take advantage of that. So but the flip side of that, what is the risk? The risk is drill, baby, drill drives oil prices down. And, maybe you got OPEC who maybe not cooperating as much. So, you got the potential for oil prices to come down, which will drive profitability down for all of the oil and gas companies, including ConocoPhillips. So there is some risk here. There's a risk in any investment that we have. I do believe, though, that from my perspective, ConocoPhillips is a good long-term buy. My second one is, and this is actually in order of how well I think they're going to do. United Health Group has taken a beating over the last couple of weeks. I guess it is maybe 3 weeks. And so they are not looking great in terms of the year-to-date return. Let's see what I've got going on with them. Yeah, United Health Group. Yeah, we're down about 13% on them overall. I think for the year, though, they are down. Let's see. Yeah, in the 1 year period, in the last month, they're down almost 23%. So that's significant. So they're down 23% in the last month. I'm only down 13. I'll take that. So anyway, United Health Group is number 2. Let me just give some numbers out on some of these things. Both of those companies, ConocoPhillips and United Health Group, has a narrow mode according to Morningstar. They are both trading at 23 to 24% discount to their fair value, and they have somewhere in the 13 to 14% return on invested capital. So those are solid numbers. Glad to see those numbers for those two companies. The third company I'd like to share with you is a company called Amphenol, ticker symbol APH. I've been buying that one recently. I say recently, maybe in the certainly in this year. I don't think I owned it at all last year. I've bought it this year, and it is currently 4.69% of the portfolio. That's a pretty big number. I like to cap at 5%, but I will let stocks run up to 10% if I just feel it's warranted. And so Amphenol is 4.69% of the portfolio. Looks like analysts are thinking it's more of a 3% return over the next 12 months. Who knows? I'm saying it's more like 19. And they've got a wide moat. They are currently trading right at their fair value. So this is a good question. I'm glad you asked it. So sometimes we buy companies, and I consider these value companies, right? These are value investments when the stock is trading at a price much lower than their intrinsic value. That I consider a value investment. I'm looking to recover what I believe the value of that company is, and that the market is just not seeing it. So those are value investments. ConocoPhillips, United Health, both of those fit into a value investment. Amphenol, however, is not a value investment. It's not an income investment. I consider it a growth investment. So, I'm looking at their, let's see if I can find it here. Their dividend yield is only 0.8%. So there's not much income there. So I really invest for 3 reasons. One is income. One is value. Sorry about that. And one is growth. And sometimes it's all, right? It just depends on the company. But Amphenol is definitely a growth opportunity, I believe. And I think we're up on that so far. Let's see, Amphenol. Yeah, we're up about 20% on Amphenol this year. So it's been a pretty good stock. Hess Midstream is kind of perpetually on my buy list, but especially here lately, it's been running a bit of a discount. Actually, it says it's trading at its fair value, but it's below what it was trading at earlier this year. It was in the 40s. I think it's in the mid to high 30s now. So I think there's some good things going on there. You see the return on invested capital is 22%. They do have a 40 dividend safety score, but I believe that's because they have kind of a captive customer, which is Chevron, Hess, soon to be Chevron. So I do like them. They grow their dividend pretty much every quarter. They've been buying back shares. They're buying back more shares here in this year. And there's just a lot to like, I think, about Hess Midstream. They are perpetually on my buy list. Then I have Alphabet Google, which is, it has a wide moat. You guys know, actually, we're, taking advantage of some Google at this point with they on YouTube. And they are currently 5.34% of the portfolio. So I've got a full position in them, but I do consider them a buy. If I didn't have a full position, I would be buying Google at this point. They are currently about 31% undervalued. So they are, they're trading at a 31% discount, and they have a 31% return on invested capital. So they are knocking it out of the park. I added one this week. It's called PepsiCo. You ever heard of it? It's, you guys know who PepsiCo is. I don't own PepsiCo. I used to own PepsiCo. They have begun to look more attractive. Some of that's related to our new department or health and safety, whatever that is, Bobby Kennedy. And will people be buying Pepsis anymore? And chips, because they have, this great snack food business. I think in the long term, I think Pepsi's going to be just fine. They are trading a bit depressed right now. They are 22% below their fair value. I think that's a decent buy. So I put them on the buy list this week. I see Rust has thrown a comment out there about RFK wants to remove soda from food stamps. And I think, that's I did hear a little blurb on that, and evidently it has something to do with nutrition. So the N in SNAP is nutrition. And so his point is, what nutritional value is there in Pepsi or Coke or, any of the sodas? So, it's actually not a bad thought. So, but anyway, I think Pepsi in the long run will be fine. But you may have to weather the storm until they either figure out how to reposition themselves, or folks just say, I don't really care. I'm just going to eat my Cheetos and my Frito-Lays and not worry about it. So another one that I added this week, this is one that I may actually do something with, is ASML. They are currently trading at a 29% discount to fair value. They have a 42% return on investment capital. They have an 82 dividend safety rating, which is really, really good. And they have a wide moat. They actually make the machines that companies like. My mind just went blank, but the companies that make chips like NVIDIA and why can I not think of these chip companies? I think it's because I invest in a chip ETF, so that I don't really pay that much attention to the companies themselves. And so I'm well diversified in the chip sector, and I let somebody else pick those stocks. But anyway, I think ASML has a really solid foothold in that machine lithography, I think is what they call it, area. So I'm putting them on the buy list. Analysts believe they have a 41% upside. I'm saying it's probably more like 16, but it's still, still definitely worth looking at. If it's something that you're looking for, it now might be a good time to pick up some ASML. And then lastly on the list, and it's hard for me to take them off the list, so I'm going to leave them on for now. It is Microsoft. Microsoft has had a nice run in the last couple of weeks. But even with that, I'm leaving them on the list. They are about 21%, no, about 11% discounted, undervalued by about 11%. They have return on invested capital 27%. They had a killer quarter. Everything was good. So, full speed ahead for Microsoft. I'm going to keep those in the portfolio. You see that they are 6.24% of the portfolio, and I'm not messing with it. I'm leaving it alone. I'm not trying to take anything off the table. I think they are going to do well in the long run. So, all right, those are my top buys. Then one thing I would share with you before we kind of get too much further is somebody asked on, let me see if I can get to it where you guys can see it. Let me see. All right, here you go. Wow, was that cool or what? So here's the Discord. There's a questions for Kevin in here. Honeybee asked opinions on BDX. It fell 18%. This was on May the 2nd. So May the 1st, it fell 18% due to tariff impact. So I thought I'd run through that real quickly. And I don't know much about BDX, but this is Tip Ranks. They show my favorite thing about Tip Ranks is that it shows where the analysts are. You can look at top analysts or all analysts, and so I really enjoy using this app. So the top analysts show their price targets at about 209. That's a 25% upside. Let's take a look at what Morningstar says. Morningstar shows the fair value at 325. Currently trading at 168, so that's a 48% discount. So it's basically, according to Morningstar's number, it's about half. It's trading for about half of what its true value is. So that's a good thing. What else do we have here that would be worthwhile to look at? They are a what do you call them? They are a pharmaceutical company, so I think it's important to keep that in mind. I don't know anything about their drugs, about their pipeline. That would be one thing I would want to look at. There has to be a reason they're trading at half of their fair value. There's something that's scaring off investors. If that's the case, I want to know what that is, and if I'm okay with it, then I would consider taking a position in it. I just don't know. I haven't done enough research to know what that is. Let's see. Here's BDX on Fast Graphs. You can see that Fast Graphs, it's trading down in the 14.7 PE. Oh wait, it says 12. I don't know. Anyway, it's pretty cheap. So regardless of what metric you look at, it's pretty cheap. Looks like, according to Fast Graphs, it's a good time to buy it. What Fast Graphs can't tell you, other than in this forecast data, but who knows how good that is, what it can't tell you is what happens if. And so those are the things we need to understand as investors. We need to understand what the company does, how well they're performing, what their risks are. And you can get a lot of that from the earnings call. So if I were interested in Becton Dickinson, I would go to their last earnings call or two, listen to that, and listen to what the analysts are asking them, because the analysts will understand the business. And that's what I would pay attention to. I think it's a very cheap company. It would be a value play because it is a lot lower than its fair value. I didn't look at its let me see what its yield is. BDX, it's got about a 2.5% yield. It's been growing its dividend about 4.3% on average for the last 5 years. So, it's really, this growth doesn't excite me a ton. The income dividend yield doesn't excite me a ton. But man, being 50% undervalued, that could be worthwhile. Um, but I tend to stay away from pharmaceuticals. I do own Johnson and Johnson, full disclosure, but I have them for various reasons in the portfolio, and they're a solid company, and I'm sure Becton Dickinson is as well, but I just don't know enough about them to say whether I would buy them or not. But I will say that they have a 91 dividend safety score. So I think they're pretty solid in terms of their balance sheet. Let's take a look at the earnings payout ratio is down in the around 30% range. So that's really solid. Let's take a look at the shares outstanding have not come down at all, but that's okay. Return on invested capital is relatively low, so that would be a bit of a concern. It's around 5%. That means they've got a lot of money invested. Maybe it's invested in the future. Maybe there's some pipeline that's coming in, and if that's the case, they need to do something to get that return on invested capital back up. Their net debt to capital is 43%. That doesn't cause me any concern. However, the interest coverage ratio is a bit low. It's 5.36. I'd love to see that above 8. So there you go. That's that, honeybee. I appreciate the question. And let's get back over here to see what else going on the Discord here, or on the Discord, in the discussion. Let's see. Yeah, so Russ says Amphenol just crushed earnings. Yes, they did. I bought them because of you. Oh, good. I'm glad. You're up 30%. You're doing better than me, man. That's great. Glad of that. So it's a great company, I think. I think it's going to be a good long-term hold. So, yeah, apparently RFK wants to remove soda from food stamps. Oh, we talked about that already. So, Christopher, it's good to see you, man. How you been? So, he says he's been buying Pepsi regularly since November. It's become his second largest position. So, that's great. So, what are the risks that you see, Christopher? You think, because I don't own Pepsi at the moment, and so I'm just trying to get some insight into that. You think this is a no-brainer, or are there really some risks there that we need to be thinking about? So I don't know. Everything else looks fine. I'm just asking. Ethical point of view, they should remove soda from food stamps. Yeah, I think from an ethical point of view, it's right. So Christopher's also been buying Microsoft since January, and is his largest position. So that's fantastic, man. Microsoft's my largest individual holding. I do own an ETF for the S&P 500, which is called VOO, which full disclosure is about 30% of my portfolio. But the rest of it is invested in individual stocks and another ETF for the chips that I mentioned earlier. But that's more like just a normal position. It's not like that VOO investment that I have. So yeah, Microsoft's my largest individual holding. So that's good. Great minds, Microsoft is the ultimate buy and hold forever stock. No need to trade them. I think that's probably a good perspective. That's the way I'm looking at it. So, all right, Fender 53, Mr. Income has joined the party. So it's good to have you, man. So tomorrow we get Powell earnings. Any thoughts? I don't know. I don't follow them very closely. Let me see if I can come up with any words of wisdom. Wow, there's here, let me show you guys this. why do this alone, you know? So Powell, I'm going to leave Russ' comment up there so everybody will know what we're talking about. Powell Industries, the analysts are looking at a 62% upside on Powell Industries. Man, that's pretty significant. I don't know if I even have them in my... Let me do a Powell. No, I don't even track them. I probably should add them to my spreadsheet here, but I don't track them at all. So I don't have a lot to say because I don't track them and I don't keep track of what they do. So let's take a look at their performance. So over the last 3 months, they're down 21.5%. Over the last 6 months, they're down like 45%. Over the last year, they're up 19.4%. So it's they really went for the sky, man. They were like around 350, and now they're trading at around 192. Yeah. So let's take a look at them on Simply Safe Dividends. This is one of my favorite apps because it keeps everything kind of just right there. Oh, this is why I don't follow them. They don't have a dividend. I guess they do. It's 0.56, but they are unrated on Simply Safe. So not much of a dividend yield there. Their dividend growth is really small. And see if there's anything else exciting here. Their payout ratio is really low, which is good. Shares outstanding. Yeah, the return on invested capital has begun to look really, really enticing. So that's a good sign. And it looks like they have no net debt. So that's a good sign as well. So solid company, nice balance sheet. Their electrical components and equipment, I would need to do a little more research on that. But, it looks pretty good. Looks pretty solid. Let's take a quick look. I don't know if... Let's see if Morningstar even follows them. Powell. No, they don't. So this Q rating, if you see that right here, that means that it's a it's calculated. It's a quant rating, I guess is what they would call it. So they say it's 217.95. They are trading at 191. So they their quant rating shows them not terribly attractive. But the analysts, my friend, they think it's going to be about 63% upside. So yeah, I guess maybe we should just wait and see what they give in the earnings. So that'll be kind of fun. So yeah, thanks for bringing that up, man. We'll see what Powell gives. I don't know. I think there's going to be maybe some tariff issues, and so we'll just have to see what they come up with, what their forecast is. Probably we will have less to do with. It'll probably have less to do with their earnings and more to do with their forecast. So, hey, Steve, he's giving me some advice here. I appreciate that. Yeah, I'm not a expert on BDX. Yeah, I didn't really call it a pharmacy. It was more like it looked like a pharmaceutical, but you're saying it's medical equipment, so that's cool. It's kind of the same thing. It's like, what do they have on tap for the future, and where healthcare is going to go. But yeah, and I just know it's in that pharmaceutical segment in the world of investing. So I don't know exactly what they do. I don't know what their products are, what their pipeline is, or anything like that. So Powell is a solid company in its own right. Yep, that's right. Wow, man, Rust is up 140% on that company. So, man, that's fantastic. Great job. Yeah, I'm glad you're here live tonight too, man. It's you see Pep as a long-term play, and it will recover overall. Good deal. Um, as well, it's good to see you, my friend. Finally finally an update for UNH. He bought some today. Not sure when the downward pressure will end, though. Yeah, I think that's kind of where my head's at too. We'll just have to see. Um, there's a lot of cost cutting going on in the governmental area, which includes Medicare, and so as they begin to really squeeze down some of these Medicare providers, I'm not really sure what that does to margins, but I do think long term I think long term they'll be fine. So, all right. So I think we're caught up in the chat. Anything else you guys want to look at while we're here tonight? See if there's anything cool. I took I don't know, just to throw it out there. Carlisle CSL. I took that off the buy list this week. And why did I do that? I did that because it's had a bit of a run. And I do like Carlisle, but I think there's some other companies that are better buys at the moment. So, yeah. My buddy Russ has joined us. I do have grandkids. Yes, sir. How about BBW? I'm going to actually have to look that up. BBW. Build-A-Bear Workshop. I have heard of this. So, so I don't know much about it. I've seen them in the malls and things like that where you buy these bears. You can have different configurations and they can say different things and yada, yada. And so it's pretty cool, actually. So that is a good thought. So we do have birthdays coming up. And, maybe that would be something cool to do. So appreciate that little comment. But let's see here. I'm going to go ahead and share this other screen here. So BBW, Build-A-Bear Workshop, the analysts believe that it has a 45% upside. So when I say the analysts, what most people do is they take all of the analysts that cover a particular stock and they will average their projected 12-month returns. That average is what then they say that the target is, the average analyst target. So 52.50, it is currently trading at $36 roughly. Gives you a 45% upside. Let's see what Morningstar says. See if they cover it. That's the downside to Morningstar. I do like Morningstar a lot, but there are stocks they just don't cover, and this also is one of those. And they try to come up with this quant rating, but I've found that it jumps around a lot and just can't be trusted, in my opinion. So $37 is what they say the fair value is. I'm not sure about that. Let's take a look at Fast Graphs. Fast Graphs, they cover everything. And here we go. Yeah, it looks to, according to Fast Graphs, it looks to be undervalued. Look to be profitable too. That's good. Their earnings per share $3.91, $3.80. So yeah, they're doing well financially, at least earnings wise. So let's take a look at my favorite Build-A-Bear Workshop. All right, so they got a dividend yield, and this is also not covered by Simply Safe Dividends, but they have a dividend yield of 2.4%. They are, let's see what it says, operates as a multi-channel retailer of plush animals and related products in the United States, Canada, the UK, Ireland, and internationally. Operates through 3 segments: direct customer, commercial, and international franchising. The company's merchandise comprises various styles of plush products to be stuffed, pre-stuffed, and sounds and scents. That's awesome. Let's see. Let's move on down here. Their payout ratio looks really good, about 22%. Let's take a look at their shares outstanding is coming down. They're buying back shares. That's great. Return on invested capital is also good, around 22%. Net debt to capital is pretty small at 33% of total capital. And their interest coverage ratio looks to be really good. So they just have they have a pretty solid balance sheet. So yeah, I mean, the things that I'm seeing, Russ, look pretty good. I would need to do some more research on it, but it is intriguing. I'm going to take that one, and there was one other one that I needed. Oh, Powell. So that one and Powell, I need to add to my spreadsheet. So those are good suggestions. So my buddy Billy over in the Philippines, he wants to know about Tyson. You know, I owned Tyson for a while. I really thought there was a good strategic advantage for Tyson. I mean, their brand names, et cetera, et cetera. Then I began to question that. And not that I think they're going to go out of business or anything, but the way that they were priced, it showed that they had a lot of future growth potential. That they then had an investor day, and that turned out to not be the case. The stock took a big hit. Fortunately, I'd gotten out before that. And so now, let me take a look. I haven't looked at Tyson in quite some time. Let's see where, let's look at their chart here. Over the last year, they're only down 1%. That's not so bad. Year to date, they're down 1.5%. They're pretty consistent. The last day or so, they've come way down. They must have issued earnings. Yeah, they reported earnings. Flat to up 1% on revenues. So, yeah, they must have crapped the bed, as I like to say, on the earnings call. So they are down 7.75%. I'm just not a huge fan of the. I'm not a huge fan of the management team. So that's really why I got out of them to begin with. Their CFO, I think he's gone now, but he was a Tyson. He was like the grandfather or grandson of the owner, maybe great grandson. I don't remember. Had some, DUIs and ended up in somebody else's house thinking it was his own because he was so drunk. I just don't think that's a professional way to run a business. So, it made me begin to think, what are they really focused on? Are they focused on themselves, or are they focused on the business? And chose to get out. And fortunately, I did. It was probably around 90 when I got out. It's now 56. Every company, though, has a price, right? And even companies like Tyson, they have a price that they are an attractive investment. I just don't know until I see more from the management team. I don't know that I'm willing to throw some of the portfolio into Tyson. I know it looks attractive, but let me see what Morningstar says about Tyson. They're at a 30% discount. So to me, it would definitely be a value investment. It would be something that might be I guess a longer term trade, maybe. It just a flip. I would want to flip it after a while. It would not. If I bought it here, looking at that 30% discount, I would get it and kind of take profits off the table when it started to come back. So yeah, that's kind of where I'm at, Billy. And they're about a 3.5% dividend yield, so that's not terrible. That's reasonable. All right, my buddy Russ here. He says, would you even consider it? Been on the radar for a while now, but not sure if I can see myself pulling the trigger. I would consider it. What I would want to study is, and I think we're still talking about Build-A-Bear Workshop, right? So if I were to study it, I would want to study, where do they go from here? What is their strategic competitive advantage? Can they leverage that? So first of all, do they have a strategy to leverage that in the future? Secondly, does the management team have the capability of carrying out that strategy? That's going to be, gut feel. It's going to be based on what you hear management say, how they approach questions from the analysts, what drives and motivates them, and can they achieve what they say they're going to achieve? That's what we want to know. And so I think they're making money on their Build-A-Bear stuff. I think their franchises are making money. Their plush toys are making money. But at the end of the day, where are they going to take this thing in 10 years? What does Build-A-Bear look like? So that's kind of the way I would approach it. I would consider it, Russ, if I could get my head around the strategy in the future, because I don't want to be trading them. My portfolio is not built to trade. It's built to invest and kind of hold. I do trade around some, but it's really more around, opportunity than it is about strategy. So that's kind of where I'm at on it. Hopefully that makes sense. All right. Zax gives a buy to Build-A-Bear Workshop. Good deal. Oh, here's Mr. Income. Tyson posted a beat this morning. Stock got whacked, and I'm waiting for current analyst comments. So, yeah. So, it has to do with probably the projections in the future, because I'll tell you, I mean, even when I owned Tyson, it was priced for growth. I mean, it was designed, this investors had pushed the price of Tyson so high that it was a growth story. And I just don't see it as a growth story. I see them doing well. I see them, having a lot of food in the freezer, so to speak. But I just don't see where they're going to leverage that into the future. So, I mean, I can see Microsoft with AI. I can see Google with all their ad business and things like that. But I just don't see Tyson. And I could be wrong, right? This is just my opinion, but it's just hard to see them delivering on the growth that's priced into that stock, or at least as it was. Now it's getting a little cheaper, and maybe it's more of an income investment. And if you're buying it for the income, the 3.5% dividend, then so be it. But if you're looking for it to recover that value, I'm not really sure it does. Unless we can figure out what their strategy is for the future. Mr. Income says the C-suite hasn't gotten in any fights at the Razorback football games either. He's watching that. Good. Keep an eye on that, my friend. Let's see. Rust has lots of Tyson in the freezer. Hey, that's a great place for it, man. I think they do provide a good quality product. We get some of their chicken nuggets for the grandkids and stuff like that. As you know, we grow our own chickens. So as a matter of fact, we had chicken tonight that we grew here on the farm. It was delicious. So, I would, if you guys do that at all? Am I this weird? We grow our own eggs. Hey, let me tell you this story real quick. We go to the beach. We take 3 dozen eggs with us from our chickens from here on the farm. And so we've grown our own eggs for the last 2.5 years. So I had forgotten what it was like to eat a store-bought egg, right? So we get there, and there's 20 people, at this place. So 3 dozen eggs don't last long at all. So my wife had actually cooked up some eggs for breakfast that morning, and then there were other people that came in that wanted eggs. So there was somebody that had gone and bought some eggs, and she cooked those up and put them side by side. It was a remarkable difference. Our eggs were, they actually had there were yellow yolks. And to me, the other eggs, the store-bought eggs, were almost a gray color. I mean, they were just very, very pale in comparison. So I think the nutrients can't be as good in those. So anyway, is that weird, or I don't know. So they confirmed 25 guidance. Commodity spreads, they aren't going to grow much. Yeah, I think that's right. I think they are priced to grow, and they are, and even in Morning Stars. Let me see if I can pull that up here. And even in Morning Stars fair value, I mean, it looks like they are priced for growth. Their fair value has some growth in it. I'd have to read through it to find out. And I don't think you want me doing that here on the live broadcast, but yeah. So I think they're priced for growth, and they're not going to grow much. So I think that's about it. So Tyson could be the next Heinz. Yeah, that's right. Man, I love Heinz ketchup too. I like Heinz as a product. I love the Heinz product. I just don't think that there for a while when they spun off with what was it, Altria and all of that split up, and they ended up getting bought by these financial companies, and who were just basically trying to suck the dividend out of them. They just didn't do very well, and so I'm hoping that they will do fine, because I really enjoy their products. But I do not own any Heinz, although I would love to, because I love their products. So Buddy Russ says guidance equals guesswork, which is why Warren Buffett never utilized guidance. He didn't want to set expectations about the immediate future. Yeah, I think that's right. I don't know. In my career, we did a lot of guidance. We did a lot of forecasts. We had a saying that I thought was pretty good. It was, if you set a forecast, you will miss that forecast. And if you hit the forecast, you hit it for all the wrong reasons. So, so I agree. I think guidance is guesswork. Although I do think it's important to understand where management's heads are, because if they are looking at a strategic move in the future, whether or not the guidance is correct, at least you can hear where they're wanting to go. And but yeah, I agree with my close confidant and friend Warren Buffett on that. Yeah, some eggs he hard boils, and it's a gray tint and taste gamey. Yeah, it's weird. I don't get it. So our eggs are to me, I think they're really good. So we I don't free range them, but I do call it safe range. We had some predators get a hold of our chickens, so I had to set up an electric fence perimeter. They have a nice big area, and they have a lot of places that they can hide from hawks and dogs and coyotes, and we've got all kinds of things here at the farm. So we try to keep them safe. We've lost one chicken in the last probably 2 years, year and a half anyway. So we've lost one chicken in the last year and a half to 2 years. So that's not too bad. We've done pretty well. Watch your mouth and leave Casey alone. Heinz is Buffett approved, at least. Yeah, that is absolutely correct. Warren is down about 60% less dividends. This one didn't work out. Yeah, sometimes even the best investors kind of miss it, and that's kind of, we all fall into that, right? We do the best we can. We do as much research as we can do, and we make our decisions, and we have to live with them. And so it is times like this, though, that we as investors can really set ourselves up for the future, because especially a couple of weeks ago, you got all this uncertainty around tariffs. Nobody knows what's going on. Nobody knows what the future holds. Those are the times that we as investors can do very well. So pick your battles, pick the right stocks, and make some investments, because we're not going to get these prices forever. So if the market ends up going up from here, and if, as mentioned on the Discord today, if there is a deal with China, you can hang it up. The market is going to go crazy. I believe that's my opinion. So I do have about, let me see what I've got here. I've got about 5.8% of the portfolio in cash. That makes me 94.2% invested at this point. I have this money on the side. It's about $90,000. I have it on the side here because I'm looking for something that is really gonna, be worthwhile. So, it's not a ton of money, but it's significant. It could be an entire position for me. So, maybe there's a company that has real struggles and I don't even own them. I could set up an entire position in that company with the cash that I have on hand. So I'm holding that, waiting for a great opportunity. And there's some good opportunities, but I haven't seen a great one yet. So Christopher says, I agree. Times like this is what establishes a strong foundation for the portfolio. Yeah, absolutely. I mean, it is times like this that, if we want to run and hide, then, chances are we're not going to do well, because it's times like this that shake out all of the folks who, are in it based on emotion. So we want to try to stay away from emotion, and we want to try to stay on a strategy and a process. So we want to set up our strategy, we want to set up our process for investing, and we want to get those things. We just want to rest on those things, not rest on emotions like tariffs and markets going down 10% and those kind of things. And that's not who we are. We are investors. We are not traders. So with that, we are coming up on 1 hour. So it has been a great show, guys. I appreciate you being here. Thanks for all of the thoughts and questions and stuff like that. So, but I'm back in Alabama now, and hopefully I'll get some sleep this week. That will be a great thing. I got a lot of work to do. Grass is growing, and got some farm work to do. But other than that, I will be back on Monday, and I will just see you guys then. Have a great week.